All right, we're going to get to the stock market analysis and projections. First, this important information. Always take the time to read this slide because this is so important. It tells about our approach to looking at the markets and the type of analysis we do, and about your using the information that we provide, or really anybody provides to you, and the important aspect of trade ownership. You must own your own trade. Without that, you will not be managing your risk properly. All right, let's talk about what happened today and in the stock market this week. Well, we all know the indexes fell sharply, and that was after short-term momentum turned negative. We saw that happening, and then the breakdown of supports, and then the selling really came in. The Russell, S&P 500, both down about nearly 2.5%. The NASDAQ down almost 5%, and this was at about 12:30 Eastern time that I got these numbers, and this is on, well, you could call it tariff fears. I mean, the reason why the markets really started to accelerate to the downside is President Trump says that the 25% tariffs are coming on Canada and Mexico. They've had their 30 days, and supposedly there's still all kinds of drugs coming into this country, which is what the president says is his reason for these tariffs. You might argue that he just wants to try to get some money in the country, and an additional 10% on China, the same thing. And China's rhetoric says they're really going to fight back on this. So we have this little Cold War that is beginning or starting up again. And to add to that, NVIDIA earnings, they were good, but not good enough. A little bit of a miss on what they expect for future margins. It's a big excuse. And that's it, just that the stock was just priced for perfection. And it would have taken a massive amount of good news to get NVIDIA moving to the upside. That huge drop really broke the bull's spirit, is what we've seen here in the markets. And you can see that as they are dumping the risky assets. The riskiest one, of course, crypto, which I showed earlier in the show, with Bitcoin down about 13% on the week. It's down at worst level about 25 or 26% from its peak. And if you did not watch my analysis on that earlier in the show, you can go back there into the full show if you're watching a clip right now and see the analysis that we brought on Bitcoin, gold, natural gas, and a bunch of stocks. So that's in the full show. The intermediate sum of the evidence now is showing high risk. And for those of you that are members and you saw my year-end show, which was put out 2 months ago, I had talked about the probability that the stock market would peak somewhere around 6175 on the S&P 500. Well, it got up to about 6150. This is a potential for a top for the stock market for 2025. I say potential because we don't really have the longer term breakdowns yet. The intermediate term is just turning down, but I still have to speak to that because there is that possibility, and we're in a significant period of risk right now. I'm going to show you those charts now as we move forward. So we're going to look at the S&P 500, the NASDAQ, the Russell multiple time frame analysis and projections, and I think there's more trouble ahead, and I'll show you that. We're going to look at the correlation to the SMH for trading timing and for some possible opportunities for trades, both on the short side and on the long side. So you're going to see that. And then I'm going to show you a little mini stock sectors where I think the actual rotation in equities is happening, but it's happening out of U.S. stocks and into European equities and actually China also. And we see that as tons of weakness comes into the U.S. market and a lot of strength in the European equity market. So I want to show that to you because I believe there's still upside opportunity in Europe. And the fact that the dollar is weakening and the fact that their currencies are strengthening is another positive for the European market. So we're going to take a look at that also. So now let's switch over and look at the charts. Of course, we're going to look at the S&P 500. So let's look at the SPY here. And actually, let's just have all of the indexes up right over there. This is the intermediate indexes that we're looking at right here. Of course, this is the market condition monitor. And let's just open this up all the way. And this is showing us the intermediate conditions looking at the market condition monitor. Level 3 and level 4 get this. And you can also put on our alerts. We have a special application for you to get alerted when these things change. And you can see that here on the intermediate patterns. These are now neutral, but once this week closes, I think that based on what I'm seeing, these are going to all go to slightly negative, slightly bearish. The IWM could go to bearish. So the same thing for the diamonds. There is a breakdown going on in here. And that will, I think, show up as these being bearish starting on this weekend when this updates for the intermediate. The daily, of course, updates daily, and you could see what's going on here, and that is the IWM is very bearish and the other ones are bearish. And they went from slightly bearish to bearish 2 days ago on the 26th. So they had turned to giving us warnings earlier than that as the market began to turn down. So let's start out by looking at the daily chart on the S&P 500. Now, what's very important in here is that you have a momentum downturn right over here, and you have this significant downside break, of course, going on in the S&P 500. This is a key level. That's the 78.6%. You could see that on that yen panic that they had over here, it got here and tickled it and then turned right back up. And that made this minor cycle bottom right in there. And then you got the rally, and the rally based on this being a positive configuration and momentum turning up, as you see right here, it should have taken out this high, and it did. But then it began to get up here into this resistance area. That number right there is that 6175-ish number that I talked about as the potential peak for the year. Now we had other upside extensions in here, but with the daily chart turning negative, that took those out of there. So now we are right now, you'll notice these are gray downside arrows. They're gray because the intermediate here is still neutral, but those are going to turn red, I believe, the beginning of next week. So this is a negative shape. And you can see right in here that this, if we're right and we have the downturn coming, that brings you down into May, June. Now, I talked earlier in the year about the potential severe risk coming out into the summertime, into the midpoint of the year, and that being the potential lows for the year coming in that time frame. And you could see this is the ideal downside bottoming timing that you have right in here between April and June. And these are pointing to the very center right over here. So this is a period that's of risk right over here. We'll put one of these yellow things in there as soon as this turns negative. And then that tells you, look out. Now, when I look at the daily chart, this is very important. The daily chart has this breakdown. So in other words, this cycle right over here made its low right there, and then it rallied, made a higher high, and broke that low. It even got down and broke that low right over there, which was that intermediate low. So it is clearly has downside momentum going on in here. You can see that as this right over here. This is the option bias study, which was positive all the way to this period right over here. It said keep your positions positive. This now turned yellow, which is neutral right there, which says neutralize your positions essentially. And when that turns red, and I think it will shortly, as it was right over here, it said, look out, there is severe downside risk, and you need to keep your option positions biased to the short side. So this is a negative momentum condition you see right there. As the slim ribbon turns red, the reversal scout negative. And if you look to the ideal troughs right over here, this is around the 3rd week of March. So sometime where between the 2nd and 4th week of March is where this declining phase should find its low. There right now, and DJV asked me, talk about the overlapping cycles. So actually in this harmonic family right over here, and this green dash is the MDY. And you can see how the MDY is just absolutely a great lead for us, comparing that to the other, to the S&P 500 and the NASDAQ. So you have this minor cycle right in here that you can see. And now we're coming to the trough of that minor cycle. So here is that minor cycle right here. Here it is right here. Here it is right here and here and here. It's just continuing. And so you have overlapping cycle energies going on in here. And after you have a little bounce in here, it then says it should fail. And you can see right over here where those resistances are. I'll just blow this up for you. And you can see this right over here says there's a potential to get up to about 59.60 to close to 59.95. So there's a potential for a real bounce in here right there. It doesn't have to be that strong. It could just, be gyrating sideways in here. I'm showing it making some kind of a flag, but then it's likely going to move down again. I've got another way of showing that to you right here. This is a phenomenally interesting chart as I switch over to the 2-hour chart. Now, this shows that cycle I just showed to you on the weekly with the overlapping cycles. These are the 15-day S&P cycles right over here, and the likelihood that it will be moving up in this flag area, but then finding resistance here. And this to me right over here, as I described on the daily chart, is a sell zone. And if it's able to get a bounce in here, it's bouncing against conditions that are very negative. You could see in here where it tested the swing zone, broke under the minus 25 and went negative. You can see in here it turned negative right here, right on time, and it's been telling you to bias your positions if you're an active trader on the short side. All of that. So you have a market condition indicator that's fallen all the way down over here from being at almost 100 or at 100 to the plus side. Look at how that turned down quickly and gave you that great information. Here is where you got a signal of momentum downside resumption. That was spectacular. And now you can see in here that it's pointing to a potential bouncing period, sideways bouncing period, with again maybe getting up to that 59.50 area right there, which would be a 90-point bounce. That would be a lot early part of next week. That's not guaranteed. We're not sure we're going to get that bounce in here. And what if this rally right over here was actually this trough? Then you could see it's already in the declining phase. If I add a few more days to this on the right, you'll be able to see how this sets up. I'm just going to apply it there. And then this, and if you learn about Hurst cycles, you'll know that the enveloping is very important, and that this essentially is saying that this is really what it looks like in here as the minor cycle comes down right into that low. And this is that mid cap 400 coming down right there, the 15-day cycle coming right over here. DJV, I hope this is really helping you understand how this stuff kind of all works together. You have that declining phase right in there. So you get a rally up here, it's really negative. I'm not going to go through the other indexes with this much information. You're going to get really the idea in there. And you can see that on the short term, these are all quite bearish. If you go to the near term, which is really 1 to 5 days, these are just upticking now from very bearish to bearish. the diamonds just went to neutral. So there's a little attempt at some kind of a bottoming going in here, but it's not really that significant. I hope that 2-hour chart that I just showed you was really enlightening, because here's that 15-day right there, and here's what it looks like on the 2-hour chart right over here, the potential bounce, and then this downside energy taking over again. So when you look at that, the downside targets here are right over here around 57.95, out sometime coming out towards mid to late March, and this one over here around 5,700. So the probability of a rally in here holding is just very small when you look at that. So now I'm not going to go so slow. We'll take a look at the NASDAQ in here, and you can see that the NASDAQ is giving similar information, but it is just about to take out that level right over there at the 78.6. So that's your warning level. Let me get a little closer look right over here so you can see that. Here's where it attempted to get down to it there about a month ago, 6 weeks ago, and now it's come down again. It has all this time. Here is that period out in the summer, I'm sorry, late spring, May, June, where it's likely to keep falling. This is a target of 19,842. This is about 19,273 right there. And let me just blow this up because I know that it's a little hard to see that. The 38% on the monthly is way down over here in the 17,780 area. That is a long way down when you look at that. Somebody asked me to show the monthly in the NASDAQ, so I'm going to do that. Just so that I can answer what the members have requested. So I'm going to go NDX on the monthly here, and I'm going to come back to that VIX in a second. That you can see here is the monthly right here. So that is the pattern in there, as you can see on the monthly. Again, you can see these high waves or tails that we're talking about. Here's your minor supports that are right in there. And this is the bear market that I think is going to happen out into 26 that you look at there. So we have a topping going in here, but the monthly is still positive. And until you get the intermediate turning negative, you don't really get a sign of the monthly turning negative. So, or even neutralizing. So this is still positive when you look at the monthly, and that answers what you were looking at for there. Now I'm going to put up the SPX and the monthly because this is so interesting. Look at these monthly patterns in here. They're beautiful. And look at what we've done in here. All of this decimation we're seeing in the stock market, in the Mag 7s, we barely have even started to come down in here. You haven't had any kind of a correction whatsoever. What are we down? 4% or something from the top right there, and we're seeing all this destruction. I mean, the 23% correction is down over here at 5,500, which, by the way, in my very conservative view at the beginning of the year, I said, well, that probably could be the worst level that we see here for this year, because you get a correction or a bear market into this period and then another upside move. But I'm concerned that this would get a lot worse after this is the 2025 period right here, that this 2026 period gets it down a lot further. So that's why I picked this for 2025 as a conservative low, but then 2026 I think could be a lot lower. It's a little bit of an update from my end of the year. We had a request for the VIX also. So I'm going to start with the monthly VIX. This will blow you away. Look at those cyclical patterns, and they are just gorgeous. We had talked about the VIX bottoming in here, and it's setting up a top in the stock market, and that's really what happened. These gray areas are where important troughs come in the VIX. That means important peaks in the stock market. You can see in here, I go all the way back to long-term capital management, that bear market there, the next bear market here. So all of this is monthly information, and where we are right now is a period here where implied volatilities could be elevated and have upside spikes for years to come. So that's the monthly looking at the VIX. This is actually a little bit more than I expected to show you. Let's just take a look here at the VIX on the weekly and the daily. And let's bring up the analysis here, weekly there and daily here. Imagine the kind of work that it takes to do this all the time. That's why we have a team of 4 that works on all of these. Here's where we said that low was coming and the potential peak in the stock market. On the weekly chart, you could see what's going on. And yes, you could get up to 30, 35, 40 during this period. And here, between now and that March low we're looking for, and then potentially out into May, June, you could get this other period in here where you get this potential for a big upside spike. Here is your daily in there. And this is so nice. I mean, look at how well that followed as implied volatilities came up. We warned that that was going to happen over here. So somewhere out over here, there'll be a little pullback in the stock in VIX and a pop in the stock market. But then this period right over here, April, May, is the period where there could be another big upside move in implied volatilities. So that is a look at the stock market. I want to show you SMH for trading purposes because as I showed the stock market, and we'll look back at the S&P 500, we're going to look at the correlation for SMH for trading and timing. Remember, the SMH, the techs, were monstrous leaders for the stock market on the upside, and now are leaders on the downside. So understanding that particular ETF and those stocks can be very valuable for the stock market trading. So let's look right over here, SMH. And you can see in here what we're looking at on the short term, bearish. We're looking at the intermediate term, slightly bearish. So you've got negative readings in there. I'm going to go to SMH here. Imagine if you could set up your charts like this, having our live charts. And this information, that, by the way, would be level 4 for you to be able to do that. And we'll take a look here at the weekly and at the daily. So if I blow up the weekly, this is a little earlier bottoming than we see as a potential in the stock market as this rolled over. You can see the shape of the cycles on the bottom, and this is the window where we expect a decline into a bottom. When you get into this potential trough, cycle low timing area is the biggest risk. This is your period of risk. This is when holders lose confidence and dump stocks. Then they get oversold and then begin to move up. This is a gray upside arrow because we're indicating that we're in this bottoming area right over there, and these red downside arrows here are telling you, actually they're black, but they should be red, telling you about the negative condition in here, momentum negative. So we're looking for a potential for a throwaway in these stocks and then a bounce. If I look here at this, these charts right over here on the daily, this says, well, momentum in here, you see the option bias indicator is only at neutral right there. So it's kind of not giving you a real negative. Look at this orange dots. When this turns orange, it warns you of extreme overbought or oversold. That nailed that peak. This is our option bias indicator, again, a level 4 indicator. And you could see in here, these red lines are telling you down here to 226 at 214. And these are the supports that come off the weekly chart. And again, sometime in here, in this sometime in this March period, you're likely to make this bottom. So if you get a rally in here in these next few days and you're a very short-term trader, the probability is it's going to get whacked again, just like we talked about in the stock market, failing after an attempted upside move. If you're a longer term trader, then consider that there's some kind of a bottom in here. You may be a swing trader forming, and I'll look at the side by side in here as you're going to get the potential low sometime over here in a bounce and the potential low sometime over here in a bounce. That makes it shortable in a bounce now and potential as a buy over here when the stock market makes one of its bottoms that we're looking for going forward. And if you were an intraday trader trading these, you could have gotten great information by looking at the 2-hour chart, which you can see just absolutely gave you the signals right in here where it turned red right there, and it was absolutely perfect. When it was positive and green right over here, and this all green, you can see it gave you the upside move right there. So this is how, if you're an intraday trader or a few day swing trader, this is how you bias your positions using our 2-hour chart there with our proprietary indicator. So that's the importance of looking at something like the SMH for the potential of giving you important information. And I think there's something important there for you to pay attention to.